The BitMart hack happened last year, but it is still being talked about because the loss was pretty significant. In fact, just recently, a whole exposition was done on it, and that's what we'll be discussing in this video. What exactly happened? What does it have to do with Binance? And how did it affect the entire crypto market? I'll be answering these questions and showing you some more eye-opening things about the hack that you probably didn't already know. So, strap in. Hi there, Shib Army, and welcome back to the channel. If you are joining in for the first time, you are also very welcome. On this channel, we talk about everything SHIB regularly, and the entire crypto scene occasionally. There is a backlog of videos on the channel that you can go through for your viewing pleasure. And to make sure you don't miss new videos, hit the subscribe button and the notification bell. Now, let's get into the video. As was mentioned earlier, an exposition was done on the recent BitMart hack, and this exposition was done by CoinMarketCap Alexandria. As you probably already know, CoinMarketCap is owned by Binance. So, when I hinted at the fact that Binance has something to do with the exposition, this is what I meant. Now, you probably already know what the BitMart hack is about. But for the sake of those who don't, I'll quickly run through it before we go into talking about how it affected the crypto community. So, as you may know, BitMart is one of the biggest and most trusted cryptocurrency platforms. It is a host to a variety of cryptocurrencies, including our very own SHIB. So, many crypto investors carry out their crypto trades on the platform. But unfortunately for some of these people, BitMart experienced a large-scale security breach on December 4, 2021. It was confirmed that the hackers carted away with about $200 million worth of a variety of tokens from BitMart's hot wallets, and the hack was first noticed and pointed out by a third-party security firm called PeckShield. Speaking of what happened on that unfortunate day, the Binance-owned CoinMarketCap Alexandria mentioned that PeckShield observed an unidentified transaction of $10 million to an address which the scanner referred to as the BitMart hacker. According to the PeckShield security firm, it is a straightforward case of transfer, swap, and wash hacking. While investigations have been ongoing, the hackers have still not been identified. However, some other things were discovered. First off, about $100 million worth of tokens that were stolen were the ones built on the Ethereum blockchain, of which SHIB is one, while about $96 million worth of tokens were those based on the Binance Smart Chain. The exact assets and wallets that were affected were also identified, and BitMart promised to reimburse the amount stolen with their own money. The reason it has to be their own money is because they still haven't found the hackers, as I mentioned before, and so cannot retrieve the money that was stolen. In fact, it might be quite difficult, if not impossible, to find those hackers. CoinMarketCap Alexandria mentions that it was found that after transferring the funds from the BitMart, the hackers used a decentralized exchange platform, known as 1inch, to exchange stolen tokens with Ether. These coins were then deposited into an address using a coin mixer called Tornado Cash. Therefore, it became impossible to trace the receiving address. So, how exactly has this hack, alongside a number of others, affected the crypto space? Well, first off, it has made a number of people doubtful about the security of these exchange platforms, with BitMart being the point of interest here. In fact, after the hack, BitMart had to turn towards an offline storage system, storing about 54% of its tokens in cold wallets. That's on the downside. But on the positive side, hacks like these have made it obvious that exchange platforms have to beef up their security system, and beefing their security would go a long way to making crypto trading more secure. Now, it must be stated that the current problem is not with the blockchain technology or, by extension, the tokens. The problem is with the exchange platforms. That is, it is not that blockchain is not secure, but that crypto exchange platforms need to be more secure. A lot of these crypto platforms are trying to do better, though, and it is safe to say that we can expect crypto exchange platforms to be a lot more secure in a few years than they are now. That said, before deciding what platform you want to trade on, make sure to do your research and choose a platform that is as safe as possible. Remember that, for the most part, tokens have no control over where they are listed. It is your job to decide where you'll be doing your business, so do your research. This is not saying that there are currently some exchange platforms that will never be hacked. Still talking about the debt issue, the Chief Strategy Officer at the Human Rights Foundation, Alex Gladstein, also weighed in on it. He was specifically addressing what he considers the self-created demand for U.S. debt when he mentioned that genius design of international dollar system over the decades to prolong market interest and need for U.S. debt even as it gets clearly discredited. Anyway, moving on from the U.S., and its debt issues. A Bitcoin whale lost a lot of money last year. But before we get into that, this channel has a daily giveaway of 100,000 shib. For a chance to participate in the giveaway, all you have to do is subscribe to this channel, like this video, and leave a comment below. Shiba inu. Good luck! Now, to the gist. The whale is MicroStrategy, the Fortune 500 company that holds more than 100,000 BTC, and the amount it lost is $146 million due to Bitcoin impairment charges. The company announced its Q4 2021 financial results on Tuesday, which is why we are privy to this information. According to Cointelegraph, the institutional software solutions provider reported a net loss of $146.6 million incurred in impairment charges on its Bitcoin holdings. The high impairment losses added to the company's operating expenses, which saw a 125% increase at $248 million compared to the same quarter last year. If you're wondering what this impairment loss is about, Cointelegraph explains it this way: an impairment loss is a recognized reduction in the acquisition cost of an asset that is triggered by a decline in its fair value. When the fair value of an asset declines below the purchase amount, the difference is written off. MicroStrategy has experienced a cumulative $901 million impairment loss on its BTC holdings over the last 6 quarters. But this $146.6 million loss was the company's third highest, and it accounted for 25% of the company's BTC purchase in the same quarter. Its highest impairment loss happened in the second quarter of 2021, when it lost 80% of the BTC that it purchased in that quarter. Now, MicroStrategy has not always had these BTC impairment charges. According to Cointelegraph, MicroStrategy decided to add BTC impairment charges after the United States Securities and Exchange Commission rejected its existing non-GAAP Bitcoin accounting methods. The SEC asked the business intelligence firm to add share-based compensation expense and impairment losses and gains on sale. Through all the losses, though, MicroStrategy has continued to buy more Bitcoin. In fact, towards the end of last month, MicroStrategy CEO, Michael Saylor, shelled out some money to purchase more Bitcoin. That is, while some people are scared of purchasing Bitcoin because its price has continued to dip, Saylor seems to be even more enthusiastic, in spite of the losses his company has incurred so far. However, according to CoinDesk, not everyone is excited that Saylor is buying all these Bitcoin under MicroStrategy. According to CoinDesk, it's not just shareholders who likely aren't happy with Saylor right now. In addition to using cash flow to buy Bitcoin, MicroStrategy has sold debt, some of it convertible, to fund its crypto buying ways. It also recently said it was going to sell shares to buy more Bitcoin, though that currency doesn't buy what it did even a week ago. Now, you should know that this CoinDesk statement was made as far back as September last year, but the situation hasn't really changed much. The Bitcoin market is still bearish, Saylor is still buying crypto, and MicroStrategy is still losing a lot of the Bitcoin it buys. So, it is safe to say that some shareholders are still not excited. However, many other MicroStrategy shareholders are still holding out hope. The way they see it, MicroStrategy shares were going for $200 a piece before Saylor got into crypto in August of 2020, and right now, it goes for $348 a piece. Granted, there was a time that each share was going for more than $700, but even that can be attributed to Saylor getting into Bitcoin. So, what am I saying? The crypto market is still not performing as well as it used to, but the CEO of a Fortune 500 company is still dogged in his purchase of crypto. There just has to be some merit to it, right? However, please do not take anything that has been said in this video as investment advice. If you are trying to decide whether to get into crypto or what to do with the crypto you already have, please do your own research and study the market. Remember that the money is yours, so whatever you do with it should be your decision. With that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comments section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there. If you're a true Shiba Inu fan, then you must check out this video.